Forget what you think you know about global conflicts. No tanks, no soldiers. The real war today, it's being fought with interest rates and monetary policy. This is the world of currency wars. And the crazy part is, whether you know it or not, your investments are right there on the front lines. So let's break down what's really going on.
Look, this isn't some far-off prediction for the future. It is happening right now. A silent, super high-stakes war over currency values is already in full swing. You could even say the first shots have already been fired across the global markets.
And this quote, it absolutely nails it. We're not just talking about numbers jumping around on a screen here. No, this is about the real deal shifting tides of economic power. And yeah, political power too, all across the globe.
All right, section 1. So what on earth is a currency war? I know, it sounds super dramatic, right? And you know what? In a lot of ways, it really is. Let's break down the fundamentals.
Think of it like a global price-cutting competition. It's basically a race to the bottom. A country goes, okay, we're going to deliberately make our own money cheaper. Why? So that all the stuff they sell to other countries suddenly looks like a bargain. It makes their exports fly off the shelves and, in theory, gives their own economy a nice little boost. But, this isn't a new trick. We saw a really nasty version of this back in the 1930s, and those very policies, they actually made the Great Depression even worse.
And this right here, this really gets to the heart of the problem. It's a classic trade-off. You can have a strong currency, which is great for attracting foreign money and making imports cheaper. But your own exports become way too expensive for anyone to buy. Or you go the other way, a weak currency. Your exports take off, but now everything you buy from other countries costs more, and that can kick off some serious inflation. It's like walking a tightrope, and a fall has huge consequences.
Okay, so who's actually fighting in this war? Well, it's not like there are dozens of countries involved. This is a game dominated by just a handful of economic heavyweights, and when they make a move, it sends ripples through the entire financial world. So let's meet the key players.
And here they are, the big four. You've got the US dollar, the euro, the Chinese yuan, and the Japanese yen. Now, what's really interesting is that each of their central banks is playing a totally different game. The US wants to stay on top, Japan is fighting deflation, everyone's got their own objective. And it's these clashing goals that really pour fuel on the fire. And hey, don't forget, you've got emerging powers jumping into the ring too, which just makes everything way more complicated.
Let's talk about the US dollar for a second, because it's the king of the hill. It's the world's main reserve currency. What does that mean? It means things like oil, gold. Most big-ticket global items are bought and sold in dollars. This gives the US Fed an absolutely insane amount of leverage over the whole global economy. When they make a decision, it's not just a big deal for Americans. Literally, everyone feels the ripple effects.
Then you've got the other major player, China. For years and years, their game plan has been crystal clear. They carefully, strategically manage their currency, the yuan. The goal? To make sure their exports are always cheap enough to dominate the market and fuel that unbelievable economic engine they've built. And that hands-on approach, it's a huge point of tension in this whole currency war.
All right, section 3. Now, you might be sitting there thinking, okay, so what? Why should I care if the US and China are having a tiff over their currencies? Well, here's why it matters to everyone. In today's hyper-connected world, nothing, and I mean nothing, in finance happens in a bubble. The ripple effects are felt absolutely everywhere.
It's like a chain reaction, really. One major country devalues its currency, and boom, the dominoes start to fall. Suddenly, you've got skewed trade balances. You've got other countries suddenly dealing with inflation. The prices of things like oil and gold start swinging like crazy, and you see huge amounts of money. We're talking international capital, just fleeing one market and flooding into another, all in a desperate search for somewhere safe to land.
This chart really spells it out perfectly. Just look at it. The country that weakened its currency, bam, their exports shoot up because their stuff is suddenly cheaper. But the nation with the strong currency, they start to struggle. Their goods are now more expensive on the world stage, so sales drop. It's a pretty stark and powerful way to see how economic advantage can literally be shifted from one country to another. Okay, so that's the big picture stuff, but let's bring it right back down to earth. Let's talk about you. What does all this global drama mean for your portfolio, for your investments? Because this is where we find a huge, and I mean huge, risk that most people just don't see coming. Seriously, ask yourself this: is your portfolio exposed? If you own any international stocks, any foreign bonds, you're not just betting on that company or that country. You're also making a bet on its currency.
And the big question is, are you even thinking about that risk? Are you prepared for it? And this is such a critical mistake so many investors make. You could do all your homework, find an absolutely brilliant company in a foreign market, and invest. The stock does great. But then, the currency of that country weakens against your home currency. And just like that, poof, all of your hard-earned gains can get completely wiped out. Or even worse, you can end up losing money, all because of a currency swing you weren't paying attention to.
Just look at that number on the screen, -15%. That's not a typo. That is the kind of damage that currency swings can do to your international investments in just one volatile year if you're not protected. Think about that, a 15% hit. That's a massive, massive risk. And yet so many people just ignore it.
Okay, last section. And this is where we really zoom out and see what this is all building towards. Because honestly, at this level, it's not just about trade numbers or your portfolio anymore. It's about something much, much bigger. We're talking about global power.
And here's the bottom line. Currency movements are no longer just economic signals. They've become a weapon, a geopolitical tool. Countries can use their currency to put pressure on rivals, to gain an upper hand in negotiations, and to literally redraw the map of economic alliances for the century ahead.
So, that really leaves us with a pretty heavy question, doesn't it? In a world where money itself is a weapon, who is really in control? As governments and central banks play this high-stakes game, using their currencies like pieces on a chessboard, it makes you wonder about the very future of power and finance. Because in this new war, the battlefield isn't some faraway land. It's the global market. And the ammunition? It's money.